Thanks for speaking to BloombergQuint, Mr. Rao. This is the first quarter of the new financial year. I'm looking at the top line and bottom line figures definitely seem to have surpassed what the analysts on the street were expecting. But two key figures which you also expressed during the press conference, one is EBITDA per ton and the other is sales volume, which was not as per expectations because of GST. Could you throw some light? First up, I want to check on, in case if GST was not there in this quarter, what would the sales figure had been?
First, we need to talk about production. Production, we have achieved 3.9 million tons, which is only 1% growth year on year. Whereas we have given the guidance of 5% in production, 16.5 million tons.
Right.
So therefore, production is lower than what we have given the guidance for the quarter one. It is majorly due to water shortage. Because if you look at south particularly, both at Vijayanagar and also in the Salem, Tamil Nadu, there was a water shortage. So we had to moderate the production because of that. One of the blast furnaces we have taken the shutdown at Salem. So that is why production was lower than what we have guided for. So now luckily monsoon is good, so therefore it is improving. So we will be able to make it up whatever we have lost, these 2 lakh tons of production in the following 3 quarters. We don't find it is a difficulty.
Alright, so we are on track with the figures with regard to the guidance for FY18,
yes,
15.5 with regard to sales volume, and production would be?
16.5 production. So we will be achieving that 16.5. Then coming to the sales we have achieved 3.5 million ton. So that is 5% growth year on year. This is what we have been guiding. So volume wise, street is expecting more. We also could have done more than 3.5.
Right.
Particularly because of GST, the destocking which has happened in the month of June, that impacted our sales.
Sure.
If that is not there, we could have done better as regards to the overall sales volume is concerned. That is why overall there is a 3 lakh tons of increase in the inventories during the quarter. So we will be able to at least partially take it out going forward in the 3 quarters. So we will achieve our guidance of 15.5 million ton of sales and 16.5 million ton of production in this year. As regards to EBITDA per ton, we are at 6,265 rupees per ton.
For the first quarter? For
the quarter one. Here also I think I have been trying to explain what happened globally, what happened in India.
Right.
Globally, HR coil prices got corrected by 13% in this quarter. Accordingly, Indian HR coil prices also came down. When domestic prices have come down, in line with international correction in the iron ore and coking coal prices also should have happened. But coking coal we have been buying globally, so therefore there is no problem, automatically it will pass through. Whereas iron ore we buy locally. Whereas iron ore prices have not been corrected, so they are still at a higher level. Correction of 200 rupees per ton has happened on 1st of July by NMDC. So iron ore prices being at the same level when the steel prices came down, so margins were under pressure.
Right.
So that is why margin you would see to the extent of only 6,265 rupees per ton. It could have been higher if iron ore prices are corrected. One. Number two.
So what's the average EBITDA per ton can one look at for FY18? I understand there's an aberration in the first quarter, but for the entire year, EBITDA per ton, what would the number be?
We never guide what would be the margin.
Give us a range.
For the year. Generally, if you look at as far as JSW steel is concerned, we are in the range of 6,000, 9,000 rupees per ton.
So you will continue to hover around those levels for the year?
In one quarter, we may be lower end, but in following quarters, we could be at higher end.
Fair enough. Let's talk about your expansion plans. You also mentioned that the debt during the quarter has gone up because of the working capital. You also have lined up capex of around 26,000 crore for the next 3 years, and your Dolvi as well as Vijayanagar plant, you're looking to augment capacity there. So are you comfortable with that level of 1.9 times, which is a debt to equity ratio?
We have given the guidance that what are the financial ratios we desire to maintain. Debt to EBITDA we said 3.75 and debt to equity at 1.75.
So you have surpassed that level to 1.9.
I'm just coming to that. So in the quarter one, so we have surpassed. And even if you see 31st March 2017, we were at 1.85. Whereas we have given the guidance that we wanted to bring it down to 1.75.
Right.
So if you look at the year as a whole, still we are reasonably confident that we will be able to bring it down to this level of 1.75 of debt to equity and a 3.75 debt to EBITDA.
And is there any refinancing which has already taken place because the interest cost has come down? I'm talking about the absolute figure for the quarter.
Yes, we have raised $500 million of bonds in the international market in the month of April. So we have used that money for prepayment of some of the expensive foreign currency loans. So with that, our interest cost has come down.
Okay.
But part of the working capital which we need to raise during the quarter, that is at a higher cost, rupee cost. So with that, overall weighted average cost of debt has gone up by 5 basis points in this quarter.
And would you look to raise more debt
Yes,
for working capital?
we would be refinancing the debt, not the working capital.
Okay.
But the outstanding debt we continue to look at refinancing and reduce the costs.
Okay. And what's the augmented capacity that we can look at for FY18?
FY18, as I mentioned, we have 18 million ton of installed capacity.
Yeah.
So we'll be achieving 16.5 million ton, which is
Okay.
92% capacity utilization.
Okay, for the entire year.
Right.
Okay. Let's also talk about the blended realization, which you've said they have been pretty much flat despite of the steel prices coming down. You've also mentioned that you've passed on the benefit to the end consumer by reducing the prices. But tell us, what is the outlook going ahead with regard to steel prices? And this time it has been flat because of the coated products you mentioned. Do you see that percentage going up to the revenues for coated products in FY18?
Yeah. When we have seen that HR coil prices or the long product prices are coming down in the last quarter, whereas coated products we have not seen that type of volatility. So we also reduced our prices for both long and HR coil in the domestic market in line with international prices. At the same time, we have seen the coated products have the potential.
Right.
So coated products we have increased. That's why our proportion of coated products went up from 28 to 32. And at the same time, our value-added products have gone up from 34 or 35 to 38%. So that has made us to maintain our NSR on a blended basis.
What's the margin that you get for coated products, roughly?
Incrementally, we will get over HR. We have to look at the coated products. So after HR is bought at the market price, what is incrementally I will make after realizing the cost of processing. So that amount varies from 2,000 to 4,000 rupees per ton.
Okay. And well, it's clearly visible there are cost pressures, but coking coal prices sequentially you highlighted that they have come down. For FY18, what's the outlook with regard to coking coal prices, and is there anything that the company is doing to mitigate the cost pressures?
Yes, sir. Coking coal is concerned, only alternative to reduce the volatility is to have backward integration. So we have already participated in one of the mines.
Okay.
Where we secured that mine. It will become operational in the next year, by end of the next calendar year. That will only give us only 2 to 3% of our total requirement. It is not a very big mine.
Okay.
So there are some more mines which are put for auction. So we will be participating in those coking coal mines in India and increase our backward integration. At the same time, hedging. Is it possible to hedge the coking coal price risk? Because the volatility is so high. It came down as low as 140 and went up as high as 300.
Right.
Even in this quarter, we have seen it came down to $146. Today, I'm seeing $178. So that is the kind of price volatility we are seeing in the
and that's going to
coal.
continue for the remainder of the year.
So hedging is one. Second is backward integration. They are the two strategies we would like to have in this. But it is very difficult to say what going to happen as regards to coking coal prices. But the coking coal prices structurally we don't see a big increase as we had seen, a spike which we had seen in the past to $300. It may be able to stabilize in the range of maybe $130 to $150 per ton.
You recently acquired 5 new iron ore mines, correct me
Yes.
if I'm wrong. So have you started sourcing iron ore from those mines, or it's going to take some time?
It will take some time. Out of those 5 mines, 2 mines we have got almost all the clearances. So we have to get now the approval for starting of the mine.
And how much will the cost come down if you start sourcing iron ore from those mines?
Cost wise it may not come down because we have participated in the auction.
Okay.
But we will be able to reduce our cost of transportation. Once we have our own mine, we will be able to have a reliable supply of iron ore, number one. Number two, cost of transportation, we can use pipelines and then reduce
There's a new
cost.
slurry pipeline also, which
Yes,
you're going to invest
correct.
2,100 crore in Karnataka.
Correct.
Okay, so that work has started already?
Right.
Okay. The main question, I believe, which your shareholders are looking out for, the management has highlighted that you are interested to acquire distressed assets, especially of the companies which have been referred to NCLT. Last time when the bid was submitted for Monet Ispat, I remember, it was declined by one of the lenders being State Bank of India. I don't want any number here, Mr. Rao. Just tell me what kind of a haircut that you're looking at when you acquire the debt of these companies.
No, number one, we don't want to talk about any specific company. Okay, that is one. Number two is now there are opportunities for inorganic growth in India. There are 5 companies out of these 12 companies which are getting referred or already referred to NCLT. Once we have the information, we will be able to study and then take a call.
Will you look at the option of, trying to acquire these assets with any foreign player?
No, the other way of putting it is, first it should be attractive to us. It should be creating value for our shareholders.
So which one looks more attractive, Morne Ispat or Bhushan Steel?
So therefore, here to address your question, what is the haircut you are looking to? The point is, today we have 18 million tons of steel capacity, whereas our gross block is 60,000 crores.
Okay.
That means it is in the range of 3,000 to 3,500 crores per million ton. So that is the kind of range where the sustainability of any company in the medium term to long term will come. When the steel prices are so volatile, it goes up and down, and the raw material prices equally. So therefore, if any investor, not only JSW, if they have to look at the long-term sustainability of operations, allocation of capital in the right way is very important. Per million ton, how much one will invest? So based on that, the haircut will get decided. As far as JSW is concerned, our investment is in the range of 3,000 to 3,500 crores for our 18 million ton capacity.
Okay, so that's the price range probably, that JSW Steel will be looking at. Thanks very much, Mr. Rao. It was great speaking to you.
Thank you.
Thank you.